Special shout out to our sponsor, Qualia. Qualia is the category-creating digital closing platform used by thousands of lenders across the country to seamlessly work with their title and escrow partners. By working better together, Qualia is powering lenders to deliver a differentiated closing experience for their clients. Through real-time communications, closing status updates, and workflow management, Qualia brings lenders together with home buyers and sellers, title and escrow agents, and real estate agents for a secure and seamless closing experience. Qualia is proud to have been awarded the Housing Wire Tech 100 Award for real estate, as well as CB Insights FinTech 250 Award. Discover how you can work more efficiently with your title and escrow partners at qualia.com/innovators. That's QUALIA.com/innovators.
Greetings, everyone. If this is your first time joining us, welcome to the Mortgage Innovators Podcast, where we deliver fresh and hopefully fun and entertaining insights on all things mortgage and the innovation that's propelling our industry forward. My name is Margaret Chiavini, and every Tuesday you can find our rotating group of co-hosts, or what our producers have dubbed the Innovative Five, who all share their own unique connection to the industry. This week, we of course have our wonderful Sue Woodard. Hi, Sue.
Hey, Margaret.
It's so great to be here with you. And we have Dan Cantinelli. Hi, Dan.
Hey, Margaret. How you doing?
Great. Thanks for being here. And we have a super fun episode this week. We're going to really be talking about how to bridge the customer experience gap between origination and servicing. You know, as originators, we work so hard to have the customer experience be amazing and really to have a customer for life and to just make the whole thing lovely enough so that they'll want to come back and do business with us again. And then their loan funds and they go to the servicing department, and sometimes things go awry. So Dan and Sue, let's kind of dissect that. Why is that happening?
Well, you know, one of the things I would start with is, as we were talking in our little green room before we got started here, Dan just shared something actually really interesting that he's heard from some customers out there really relative to this. And I wonder, Dan, it kind of laid the groundwork really nicely on how important this is. If you would share what you did just a few moments ago.
Yeah, so we were, a couple of, as we interview a couple of customers, they obviously are spending the majority of their time with this servicer, typical, based on our portfolio today, we're looking at a customer that's basically spending somewhere between 7 to 10 years in our portfolio. And if you think about that length of time, that's just really where they're spending the majority of their time. You got a 45-day transaction on average. And, we're hearing from customers that, if a subservicer or servicer is not doing their job correctly or giving a, great customer experience, customers in the next transaction, they are less likely to use that lender because they think they're going to end up back in that servicer. So one of the customers we were talking to actually decided to use another lender on their next transaction, and they actually ultimately ended up back up in that same servicer. So it didn't actually work out for them. But it's ultimately the fundamental problem is we need to figure out, we spent so much time in the last several years as originators making sure that this just transactional experience is a positive one and has all the digital tools that customers want and desire. But I think what now our industry is starting to see and focus on as we talk about retention, customer for life, and customer loyalty is how do we make sure that we're leveraging that time spent in that 7 to 10 years with the servicer to really make sure that we're keeping our brand front and center, we're keeping that that trusted mortgage advisor top of mind for the next opportunity. And that's the next, I think, evolution and shift that we're going to see as far as digital experiences go. And some of the challenges come with that is how do you really bridge that gap between the origination transaction experience and creating a frictionless handoff to that servicing platform, so that you can really control that experience and not have to rely on these sub-servicers to really do that for you. Because a lot of the industry is using multiple sub-servicers too. So now you got multiple experiences that you're kind of pushing this customer to, and you're really not sure where they're going to end up. And there are multiple reasons why you may have multiple sub-servicers and why they may end up in one versus other based on loan program and different things. So really trying to figure out how we create one cohesive customer experience through the entire life cycle of that customer.
One of the things, Dan, that I've heard in talking to lenders about this exact issue recently is really surrounding setting expectations. Because I think we tend to, when you're in the mortgage industry, you think, well, everybody knows how this works. They know that we're going to do their mortgage and then it's going to go off to here and then X, Y, and Z is going to happen next. And I think we sometimes forget about the fact that the things that are really commonplace to us that we think, oh, it's pretty natural, A to B to C, and then you're off with your servicer, is not at all normal for a lot of the customers that we're working with, and they don't know what to expect. And in a lot of cases, even during the transaction itself, if you're not setting expectations properly on what the handoffs are going to look like, who the customer is going to be working with throughout that transaction, and then really critically what happens after that, that beautiful closing experience, if you have a clinker then in the handoff to servicing, to your point, and the person doesn't know what to expect, that's where you can really do some damage to that relationship and take all of the joy out of that beautiful, happy closing experience where everybody's getting their keys and throw a wrench into it. And so what we're seeing at Stratmore, we're obviously talking to a lot of customers about their customer experience and really doing a lot of journey mapping and really sitting in the seat of the customer saying, what does it actually look like, feel like every single step of the way to make sure that it's cohesive. And there's a lot of gaps that we're finding that are purely around expectation setting and being really clear and not just saying it once in an email and hoping the person read it when they're stressed out, freaked out, packing, kids are crying, all the stuff's going on. You hope they catch it, that here's what's going to happen next and what the handoff to servicing looks like. But it's really doing it sometimes multiple times and really explaining, this is what it's going to look like. Here's what's going to happen. Here's what you should expect. If something isn't happening like this, reach out to me and we're going to help, or wherever the right place is, to dig into it for you. And it's making sure that they, again, just have an expectation. It's when they're expecting, one thing to happen and something different happens. I think that's where you get those big breakdowns in that customer experience and leaves that bad taste in the mouth, to the point that you mentioned earlier, for that long period of time that they're sitting in servicing, you don't want to set it off on the wrong foot.
Yeah, it's so true. And as expectations need to be set up front, and even education too, right? So expectations and education probably go hand in hand together. But when if you're a first-time home buyer, you mentioned servicing, they're like, well, what is that? Like even the verbiage we use, right? We all use these crazy acronyms in our industry. It's like natural language to us because we've been doing it for so long. But trying to make sure that that's clear on, well, what does it mean to be serviced? So there's some educational components there to your point, setting the expectations, making sure you're delivering the right education as far up front as possible. So it's not like you're just handing them over to this sub-servicer and it's like, oh, I just built this relationship with Finance America and now you're handing me off to, sub-servicer X. I never even heard of this company before. Who is this?
Right.
Yeah.
Right.
The other thing too that I think is really important along the same lines, setting expectations, education, is also kind of warning them for, I want to say almost known breakdowns. That it's very likely that when this happens, this item will happen. It's very temporary. All you have to do is call or give me a buzz. I'll help you through it, but it's very normal, nothing to worry about. And they're just, transitioning all of your information. So I think that's so good. Sue, I love that you talked about setting expectations, because it almost seems like it's such a wise standard practice for every aspect of the different conversations we've been having. Setting expectations, just for some of the other episodes, the choosing a vendor partner, all of that. So it's especially important when we're talking about our precious borrowers, right?
Yes. One of the things that came up in a recent conversation on this is back when I was originating, which was a couple of minutes ago, but when I was originating, one of the things that I would do is at the very beginning of the process, I would give them a list of the 29 things that could go wrong. And I would say, there's a lot of complexities to this, and I'm going to be right here with you, but here's 29 things that could happen, that have happened to people. But if any one of these 29 happens, I'm going to be here for you. And it made it a lot easier to then be able to call them and say, hey, remember that list I gave you? It's number 17. And that's the one that we need to dig into today. And, now I'm here with you and I'm going to help you through this. But I just, that way they kind of have, it's not to scare them, but it's to give them a sense that, hey, this is a complex transaction. It's why they go to, a company like Finance of America to work with a trusted advisor on that transaction, because they've got somebody there. But it is to, to the points about, the acronyms and the things that are very normal to us, the things that we just even throw around the terms, like, their approval, like, is it through underwriting? Did they get their approval? Somebody is laying awake at night, freaking out, wondering if they're going to get approved. And we don't tend to think about that. So it's about that expectation setting. And sometimes I think it is a good thing to lay out all of the things that could potentially happen, but say, hey, I'm here for you if any one of those things happen to you.
I think that's a great idea. It's comforting. So what do you guys think? What I'd like to do is just sort of talk a little bit about what might be some of the thoughts or hypotheses you have around why there is such a big gap. Origination, I feel like we have it dialed in. Servicing, I think there's still a lot of room for improvement. And why is that? What is causing the gap where we could almost say, it almost seems like in general, the servicing side of the business is not as rigorous in the customer experience?
Yeah,
What are some of your
I'll start. Yeah, it's definitely an area that's been lagging behind when it comes to customer experience. And I don't know that I have all the answers on why that is. I think people have just been so focused on the transaction as the starting point, but I'm definitely starting to talking to our peers in the industry. I'm definitely starting to see people more focused on there as they look at these retention rates, and industry wide is still, hovering around 20%. And, a big part of it is this servicing experience issue. That's what customers remember. They've just literally been making this payments to this company for, the last 7 years. That's what they're going to remember. As people start to shift to that, I think there's a couple short-term things you could do. But let me just start by answering your question first. Is why do I think it's lagging behind or it's difficult? Is just because I think of the nature of the subservicers. Very few companies are actually owning the platform and actually servicing their loans now long term. They're leveraging subservicers. Many large companies are leveraging multiples. They all run typically different platforms and different silos. So it's much more complicated to figure out how to bridge that gap in those experiences and really create one uniform platform or experience for that customer from a digital standpoint. But there's definitely short-term things you can do until the industry gets there. And I think it will get there where we'll have one origination through servicing platform that we'll be able to offer our customers. But there's short-term things that you can do now. And Sue hit on a couple of them. It's setting expectations. It's making sure you look at your journeys and look at how to inject those educational pieces to understand. You let a customer understand what servicing is, what it means, what to expect. So there's things that you can do short term to try to bridge those gaps and create less friction. Educating the customer on setting up ACH and how to do that and making it an easier handoff is all things that we try to inject into our journeys. We also try to personalize that, so we'll encourage our originators to kind of record these educational content, so it's coming from them in a very personalized manner. So I think there are some things that you can do short term until really the technology comes to bear, that we can start bridging that gap from origination through servicing in one single digital experience.
Hey, Dan, when you say look at our journeys, what do you mean exactly?
Well, look at all your touch points throughout that origination process and figure out when the right time is. You don't want to wait till the closing table, to Sue's point. You can educate the customer before they get there so that they understand, this loan is, it could be serviced by us. We may determine to sell that loan, and typically you're going to know that based on the product and structure if your company's, giving you those details. So, I'll just use an example of Finance America. We typically service nearly all of our, conventional agency, transactions. So our LOs know that 99% chance that this loan is going to be serviced by us. So they can start setting those expectations, educating them on what's going to happen through that end of the transaction, and prepare that customer so that they're not just like, oh, they get to the day after funding, they get this, letter in the mail and says, yeah, Finance America ditched you and you're now with, subservicer X. That is not going to go over great. And
They
they're
feel
going to
like you broke
immediately,
up with them.
yeah, you just broke up with them, Sue.
Yeah, exactly. Truly. Well, and one of the things I think about, Dan, you hit on a good point, because it's a very different story depending on if you're servicing or if it does go off to a sub-servicer. But I do think that any company, regardless of if you're doing any servicing or not, really thinking about, to your point, what does that journey look like, and what kind of information and content and education and connection are you keeping with that borrower long into the future? Even though we know, they're probably not going to do another transaction, like 2 minutes after they've closed, maybe purchasing a new home, the number of referrals, the repeat business for a second home, a vacation home, the family members, all of the different things that can come out of that, as well as that lifetime relationship. And one of the things that, I think about every single time that I get my own mortgage statements, one of the things that I wish that somebody would do is that if they would marry some of the information together about your home value, your neighborhood, home value, along with where your, current mortgage is. I mean, that's where it gets exciting for people, I think, is when they're starting. And I feel like you've got some things like that you're working on, Dan, where you're really, helping to show people, here's how much equity. I mean, that's what people care about. That's the most interesting content that they're going to get, is they just went through this process, yes, to have a home to live in, but it's also, for a lot of people, it's the largest asset that they own. And so they like to see, how much is that asset worth? How much equity do I have? And then, you can open some interesting conversations with that.
The other thing that I was thinking of, and you taught us this, Sue, in earlier episodes as we were talking about, innovation. And one of the things you were always encouraging is the standard practice of collaborating with your vendors and your trusted advisors within the process. And it just occurred to me that that also might be a very practical best practice, is how do you collaborate with your servicing partner, whether it's your own company or whether it's a sub-servicer, to say, hey, look, we are working really hard to make the experience look like this for the borrower on the origination side, and we want to collaborate so that you pick up the baton and you continue to make it this wonderful experience, and almost have a shared narrative and a shared commitment, for lack of a better word, on how those touch points are going to go.
Yeah, and the other piece, Dan, I'd love to hear you touch on, that you raised when we were talking about this topic, is how are you engaging that referral partner along the way as well? I mean, you touched it, made me think of it, Margaret, when you said, how are you collaborating with your, the partners that you're working with to ensure that this is happening, right? I mean, like, I know Finance of America, again, just has the best in breed tech stack of, the partners that are helping enable that communication. But the referral partners are a big part of that as well, because that is where you're going to get, that continued business, and you want those customers that have been referred to you to be really, speaking well of the entire transaction end to end, not just the transaction itself.
Yeah, in that regard, I mean, we try to, at Finance America, we try to really control those experiences and communications, email campaigns, and things of that nature, so that we basically integrate with a lot of our servicing partners, so we could take some key data elements, push that back into our CRM. And, if we see things like, payoff requests or delinquencies, those are key insights that you can leverage to make sure your advisors do their job and reach out to them and have those conversations, automate marketing outbound to that customer, just as a touch point. And it gives you an opportunity to keep that, not only the advisor engaged and top of mind, but also, if they came through a referral partner or a real estate agent, keep them co-branded on that communication as well, so that you're providing some value, back to those agent partners to try to capture more business.
Right on.
Yeah,
And some
fantastic.
cases, even educating the referral partner. We like to think that they've kind of been through it enough, but again, you get a buyer that is experiencing a handoff to servicing and complains to their agent, at all. I mean, that's again, that can reflect on you. So it's all about, as we've talked about, setting the right expectations, educating the borrower, but also the referral partner as well.
Yeah. Well, what a fantastic conversation, you guys. Sue and Dan, I always love visiting with you. I learned so much. And I think, just as an industry, having a goal to close that gap so that the customer experience is excellent on the origination side and the servicing side. And then really having as a background of obviousness everywhere, especially for this topic, in setting expectations, educating, and I of course love what you said, Sue, having the list of this can go wrong and this is exactly why you're in the right place, because we're going to help you with that. So thanks so much, you guys. And for all of you listening to today's episode, we hope you enjoyed the topic. And if you like what you heard, please make sure to subscribe to the Mortgage Innovators YouTube channel or wherever you podcast. Okay, until next time.